Hello guys, welcome back to a new video. Now I want to give you guys a little recap, or at least breakdown here on the trade that I taken on the euro dollar. This is on my live charts this morning during a live call on ZCFX. If you are interested in getting access to that, guys, make sure you go ahead and join us by hitting the link below. Now without further ado, what I'm also going to be doing in this video is I'm going to be speaking on the topic correlation, but more specifically the correlation between the DXY and the EU. For example, there are commodity correlations, for example like the gold and the Aussie dollar, but in this video I'm going to be focusing on currency correlation and how you can use the DXY to your advantage on for example trading the EU. So if you're a guy who trades the EU but you haven't really heard of or trade, or not really trade but more so analyze the DXY, then make sure you tune into this video because it will definitely help you trade the EU. Now again, currency correlations, or forex correlations, are pretty much a statistical measure of the extent that currency pairs are related in value and we move together. So if two currency pairs go up at the same time, this represents a positive correlation, while if one appreciates, so moves bullish, and one on the other depreciates, for example like DXY and EU, then that will be a negative correlation. That's exactly what EU and the DXY have. It's an inverse or negative correlation, right? They have a very high inverse correlation, in fact. So whatever you see on the DXY, EU is most likely doing the opposite. Okay, and a keynote to take advantage, it's just to write down here and take advantage of, is if the DXY, sometimes if you don't monitor the DXY, EU will do like a random move, but DXY will have an explanation for it. And it's like the trade I took to down EU. If I had entered where I had entered and had my stops loss where I would have had my stop loss if I was just focusing solely on euro dollar, then I would have been stopped out the trade, as opposed to focusing on the DXY as well, because I had a different invalidation point in DXY than I did to EU. So I just adjusted for that on the euro dollar chart based on what the DXY was telling me. So sometimes the DXY will tell you one thing, whereas the euro dollar won't be able to tell you anything. So just using the two together can definitely help, and obviously understanding and just monitoring the currency correlations is quite important for us traders, because it can affect your level of risk when trading the markets. For example, if you're trading a pair that is correlated in the same positive way, namely the pound dollar or Aussie dollar and the euro dollar, and you have a sort of long-term bias in each one, but for example Aussie dollar you're going short but you're buying euro dollar, well then you're most likely going to be stopped out on one at least, if not two or both, because obviously they move in a quite a similar way, so they have a positive correlation. So if you were to have both long bias in each, then it'd be better to have a short bias than a long bias on one or the other, okay, so to speak. So it's important to know that, because it can definitely help you understand it's definitely important to understand currency correlation, just because it will definitely help with your risk management and money management side of things. So yeah, that's pretty much it really. And what I will do is I'll jump onto the euro dollar chart, and then at the end what I will do is I'll jump on to a correlation, which we can go over some pairs that are correlated, but for this video we're going to be focusing on the DXY and the EU, but like I said, at the end I'll go over some stuff, so don't worry. Now as you can see here, I'm just going to open up the DXY chart, which is exactly where my entry was. So this is a 9:13 AM there, as you can see, and this is also 9:13 AM there as well in the DXY. So as you can see here, okay, 9:13, same time. So I just want to show you guys why I entered there. So as you can see, the DXY was in a nice demand chain. We had this plenty of mitigations, and we came back down to mitigate this. And I was simply just looking to follow the trend, and obviously I had if you just zoom into the 50-minute on EU, price was heavily bearish. The 4-hour, if you zoom out to the 4-hour as well, in a bullish range. I was expecting price to pull back, and that's exactly what price has done. And as you can see here, we're heavily bearish, so I was waiting for any little like slight or minor pullback that I could take advantage of using the 1-minute time frame. As you can see, price melted to the downside. We created this low here, and we've seen a nice little pullback into this imbalance area that I accounted for, and this POI here. So we mitigated that quite nicely. Then I jumped to the 1-minute time frame, and that's where my entry was, and I was simply just looking to ride price down into this overall low here. Ideally this zone I had a little run on leaving on, but I just decided to fully close out the trade at this low here, and I'm glad I did that. Although I missed out on a couple more percentage, it is what it is, it's fine. But brilliant trade overall, to be honest. That was exactly my bias. Price was just heavily bearish. I'm not trying to predict anything like going long, as of right now until we start to take out some major M15 highs. So I was looking to just get in on any minor pullback using the 15-minute and then jumping down to the 1 minute from the 50-minute POI. Pretty simple, okay? Now when we jump onto the 1 minute here as well, this is where the M15 pullback, well at least the minor pullback was that we saw just a minute ago. As you can see, price came back down here. We melted to the downside. Well, we tapped into the M15 POI. We had a nice flip zone here. So this a flip zone is pretty much where you have a demand. Price comes down into it. We short term react, and then we break through that zone. So you can usually expect that zone to, you know, hold on the next mitigation if price comes up to this way. And then obviously that it did. Ended off this engulfing candle. My stop loss usually would have been above here. I'll explain that in a minute why I didn't have that. And you know, price kept me in the trade out. My stops a little bit adjusted just above the highs around here as well. And yeah, I got into the trade and then just sort of held the trade down into the lows here. I took off around this area, I believe so, around 2.5 hour. I was using 1% risk in total, so I took off 0.5 at this point. That was around 2.5, so around 1.25 to 1.5. Already banked at this point. Then I let the other remaining 0.5 run to that low, so you can, you know, do the math if you really want to. You know, 0.5, so you got 2.5 at the original 1 and a bit quarter position. So very nice trade overall. And yeah, I'll just jump into the rest of the trade recap. So obviously this here, you melted off hugely, had a nice range high and low. Unfortunately at this current time within this vicinity here, my missus called me to go help and do something, put something up on a wall, just a shelf. So it's very unfortunate that I did miss out on this move, but I was still in the original position, so it's what it is. You'll always leave money on the table. That's the #1 biggest advice I can give you guys, just to, you know, peace of mind as well, is that you will always leave money on the table, no matter when you close a trade. You know, there'll always be a should have, would have, could have. You know, for example, I should have left that trade run because I would have, you know, made a bit more money. That will happen plenty more times. If you're a beginner, that's only happened, you know, a few times to you. Just expect hundreds and, you know, thousands plus more times like that to occur, because it definitely is something that happens on, you know, a regular basis, so to speak. Yeah, here was a scaling. We had a nice engulfing here as well, which you could have entered from with your stop spot there. Very nice, and just straight down into the lows. So it would have been a nice trade if you got scaling, but unfortunately I didn't. I ride back around this area, and then I got called back around here. So I just said, hang on a minute, and then price took out the low, and that's when I closed the rest of the position. So brilliant trade. And I hope that makes sense. Now in terms of this invalidation point that I was on earlier, it was pretty simple, okay? DXY, we had a nice demand chain, and this is the range high and low. Okay, so we had this range high, range low, and obviously if price going to continue to respect this bullish range and the bullish, you know, demand chain, we should see price stay within this, you know, range high and low, and respect that and move bullish again. And that's in fact what price did. Now this range high and low is where this range high and low is. Okay, now even though it would, you know, equal highs, sort of create equal highs, you could consider that as a slight wick break as well. Even though it did that, a lot of people would have been taking out the trade because they would have had the stops here. And that would, you know, usually where you have your invalidation point, what I mean by invalidation point is pretty much where your stop loss would be. So for example, because we're in shorts here position, right, we're in a short position, if price was to break with the high, I'd flip to a bullish bias. So that's sort of my invalidation point from what I mean, okay? And again, pretty simple. Price closed above the high, well, not closed above the high, sorry. A price wicked above the high, and obviously a lot of people would have been stopped out, but because I was looking at the DXY, that saved me, because I thought, you know what, I'll just monitor it, you know, sort of manually monitor the trade or manage the trade, so to speak. So if price was to come you know, below that low there, I would have most definitely closed out the trade on EU for a little loss there. Okay, so around this area, but we stay within that bullish range, even though I entered off here. But a little bit of drawdown, but drawdown is nothing, it is what it is. Happens sometimes, it's just part of the game, so just get on with it. A lot of people will be sweating, but again, just monitor the DXY for the invalidation point to be tagged even, and just let the trade run out. As long as the invalidation point, as long as it's in this case below the invalidation point, then it's all that matters. But that's pretty much it, and that's what I mean by the DXY and EU. Like I said, you know, they have a quite high correlation. So for example, if we just flip to the 4 hour, I've got markings up of the XY and EU 4 hour, but as you can see, if I was to just flip this around, it's fairly the same, so to speak. Okay, so as you can see, you got this range low, range high. Again, you got this range low, range high. You've got this previous mitigation here. You got this previous mitigation here. Obviously, this is a bullish example, but that's because I flipped the charts. If you press Alt and I, if you're on keyboard and mouse on the Windows, you can just flip the charts like that. And I don't feel like this would help, but it more so probably would help if someone's one-sided to seeing like a one-sided market. So for example, if they see, you know, buys better, easier to spot, then I mean it can help in that sense, and then flick it around last minute. Okay, but yeah, that's that anyway. But that's what I'm trying to show you is, guys, is just that it is obviously quite positively correlated. Obviously you got this down move here, you got this down move here. Obviously this is bullet bearish again. We just flip it back. And then we got this little pullback here, which is this pullback. We've got this pullback, which is this pullback. We've got the rally, which is this rally. So as you can see for yourself, guys, they move very, very alike. And that is exactly what I'm trying to explain there, the correlation between the two. Obviously, if the DXY is moving up, EU will move up. Now, just taking a look here as well. Sometimes in terms of, for example, the price could keep pulling back. Tap into this POI up here, which means EU could go a bit lower. Okay, so that's why looking at the two can sometimes, like for example, this will explain something. For example, if you know it took out that low, then be bullish, for example, that would explain that because of the DXY. Whereas if you didn't look at the DXY, that wouldn't have explained it. Now that's pretty much it for the DXY and EU. What I will do is because I just wanted to help you guys, is I'll just jump onto a website that I use. So let's jump onto that and look at the correlation. So as you can see on this website, it's fairly laid out. It's pretty simple. Or you can just go ahead to Google and just type in Forex correlation, and it'll come up with like a calculator or a table or somewhat. But yeah, to just go off this website, like I said, I will link it below. I'm not affiliated with them or anything like that. It's just a website I used to use back in the day. Now, if the correlation is high above 80 and positive, so in green, then currencies will move the same way. Vice versa, if the correlation is high and above 80, but also negative, so red, then the correlations, or sorry, the currencies move in the opposite way. Now, if the correlation is low, so below 60, then the currencies don't really move in the same way. It's just sort of do its own thing. Now, this is, you know, you got daily, 4 hour, hourly, 50 minute, 5 minutes. So sometimes, for example, they might move like together on a lower time frame, but opposite on the high time frame. That's something you see. If we just look at the daily, you can, like I said, you can go ahead and check out this website yourself. I don't need to spend too long on this one, guys, but it's just a good way to look at the correlation. So obviously you can't look at EU and EU together, but you can look at AUD and Euro USD. So as you can see here, plus 93, so that's in the green, so that's 93, so they've got very strong correlation. So AU and EU will move in the same way. Now, if we just look at a pair, that's let's just say Euro NZD and NZD CAD. They are on a daily time frame, negative correlated, and in fact, they have a very high negative correlation, so inverse correlation. So, for example, if the Euro NZD is moving bullish, then NZD CAD is moving bearish. Okay, I'll have a couple more examples, and then we'll jump. Well, I think that's pretty much it, really. I've already done the EU and the DXY breakdown. Hope you guys have enjoyed that breakdown. It was a great trade that I had taken this morning, like I said, in the live call as well. So if you want to join that, make sure you go ahead and do that. Again, looking at Euro JPY and CAD JPY on the daily time frame, they have a high correlation, so they move in a similar way. If you just take a look over here as well and look at Euro NZD and NZD CAD, I've already done that one. But if you just take a look at, let's say, yeah, this one, Euro NZD and NZD JPY, they have quite an inverse correlation. If you look at something like USD JPY and Euro NZD, they don't really typically move in the same way. They may have a bit of a slight, inverse correlation, but it's not the same way. No two charts move the exact same way, but you can see where I'm trying to get from. Correlation can definitely just help as like a bit of extra confluence, so to speak. And obviously, when you have higher confluence sort of trade, then it's just like high probability. So that's pretty much it. Yeah. Let's just look at your USD CAD and GBP NZD. They have a slightly positive correlation, but they don't move in the same way, so it's not something to sort of monitor between the two. You want to just try and stick to the highly correlated or inverse correlated pairs, so that'll give you like extra confluence. If you just take a look at GBP/JPY and NZD/JPY, they have a high inverse correlation. Euro/JPY and NZD/JPY, they have a high positive correlation, sorry, for both of them. So like I said here, if they're in the green, the higher the number is, then the higher the correlation, or move in the same way. If it's like 100, then they're going to move in the exact same way. So anything close to that, they'll move in the exact same way. Anything that's in the minus and in the red, they have a quite, so for example, if it's minus 99 or minus 100, then they move in the exact same way, but opposite way around. And yeah, that's pretty much it really for correlation. You know, don't overcomplicate it. It's just literally the correlated pairs. And just, you know, some knowing that some move in the same way and some move inversely. So, you know, if one's up, one's down, just take a look at the timetable. You know, hourly time, we've got the 50-minute time frame even. Euro CHF and NZD CHF and the 50-minute move quite similar. Same for AD CAD and NZD CHF, they move quite similar as well. AD USD, Euro USD, you already know that moves in the same way. GBP/NZD, Euro NZD, they move in quite a similar fashion as well. But yeah, like I said, I'll link this table down below. Go ahead and check it out, guys. That's pretty much it for today's video. If you are interested in the mentorship, make sure you go ahead and check it out, because I'll literally help you guys one-on-one. And there's a reason why we've been seeing a lot of success recently with our students. So again, guys, if you want to seek top quality education, then look no further. Make sure you hit the link below, and I'll be happy to help you out, guys. Thank you for watching if you're listening this far. And yeah, just take care, guys. See you in the next one.